The good thing about being locked down is that your computer's at home with you, with all your charts.
Yeah, well, the sad thing about my life is that nothing much really changes when lockdown happens.
Yeah, that's because you moved out to the sticks.
Yeah, still walk the dog and hang out with my 6-year-old. So
that's great.
Nothing much changes.
Yeah, cool. I wanted to get you on today because we've been talking a lot lately, and we got something launched that very exciting earlier today, where we're showcasing your method for finding trades and managing those trades specifically, where lots of exciting stuff. I'm not going to go into the details here because it's all on the page that people can sign up to with. But we've been flooded with testimonials for your service, and for good reason, as people will see. So I thought it would be good to focus today's insider on your method. Yep. Now, a good little entry point I thought was that a couple of weeks ago, your system, your method for looking at the charts actually pinpointed the big falls in Bitcoin. Now, you don't usually recommend anything in the crypto space, but I thought it might be a really good to show people your thinking and your process for finding those moves, because you relate those to stocks as well.
Yeah, exactly. I mean, there wasn't much going on in Stockland, and I do those Monday week ahead videos. So I was sort of scouring the markets, looking for something interesting to talk about. And on the Monday morning, a couple of weeks ago, I noticed Bitcoin had cracked below a key level that I'd had my eye on. So I thought, I'll do the video about Bitcoin today because it's looking pretty interesting. Yeah. And I made a target on the day, on the Monday, that I thought it could get to 30,000, and it got there about 3 days later from 45,000. So I'll show people.
Bring it up. And while you're bringing it up, I just thought it was just a really interesting thing, because it just shows you got all these people in the crypto space, but you just kind of applied your stock charting method over the crypto space, and you came up with a pretty preeminent level, didn't you?
Yeah, well, I mean, it all comes back to technical analysis, just it being a sort of a psychological map, of what's going on. So the price of anything is that everyone's got different positions at different prices, and people react in similar ways in similar situations. So it doesn't really matter whether it's Bitcoin or two flies walking up a wall or whatever. So what I saw in Bitcoin at the time was, and what I said in the video on the Monday, really, I was just watching, a very simple analysis of the trend heading higher. And, charting 101, people will look at that and see a bunch of higher highs and higher lows as it's trending up. And what I look for, and I guess something that maybe people haven't heard about or don't know about, and my little method of seeing these change of trend, is first of all, picking up on the break of the highest low in that trend, and saying, okay, well, that's, for me, the hint. So we've got a bit of a hint there that there's weakness. So the massively strong trend up from, 10,000 to 65,000, pretty much every wave has just been, powering higher. And the highest low in that trend never under threat. So I'd seen that and saw the bounce from there. And usually I'm looking for a retracement of waves. And if people watch my week ahead videos, I'm always talking about the shakeouts and the retracements of waves and that sort of thing. And I have areas, in waves where I expect prices to get back to the buy and sell zones. And people who have watched my videos will know what I'm talking about. Yeah. So we have the initial wave down, and then the reaction, which sort of heads up into the sell zone. And once prices break back below that low, that's a little bit dangerous. So that's your first sign that potentially this is now looking like a downtrend. So we've already got the hint where the highest low got broken. We had the wave higher, which got rejected quite quickly. And on the Monday, prices were trading around 45,000, about here. And I don't often look at head and shoulders. I find most classical technical analysis a bit bunkum, and it doesn't work often. But every now and again, a head and shoulders pattern will jump out at me. And that's what I mentioned on the day, was just looking at, here we've got your first shoulder. There's your head. and then there's your next shoulder.
I was going to say, Murray, so it's significant that the second shoulder broke down. It didn't make the previous high, did it?
Exactly. So that's what the head and shoulders is. You got the shoulder, two shoulders that are lower than the all-time high there.
Yep.
And once the neckline gets broken, so once it actually trades through that neckline, I'm then looking at the potential that there could be a measured move. And all I did during the video, when I said prices could get to 30,000, was looking at this move from the high to the neckline.
Yep.
And then just grabbing that and extending it down. And that's where I said that the prices could get to 30,000. And I said that on the Monday, and 3 days later.
Show on the chart where the Monday was, Murray, because obviously I just find it interesting because at the time you couldn't see the right-hand side of the chart where you're talking about. Do you know what I mean?
So the prices were here. They're at 45,000.
Yeah, right.
And I made the prediction that it could get to 30,000. And that's actually been the exact low. And prices are now up at 38,000.
Yeah.
So that's a pretty simple technical analysis, measured move, a head and shoulders. And it's a rare part of my makeup of what I do. I rarely look at the classical stuff, but that one just sort of stood out at me at the time, which is why I mentioned it. And, and from there, I was then sort of looking at relationships between Ethereum and Bitcoin. And this week, people could go and look at last Monday's week ahead update and see that I was sort of looking at the relationship of Ethereum to Bitcoin.
And that's what this chart shows, right?
Yeah. This is a chart on a daily chart looking at the relationship between Ethereum and Bitcoin. And I was sort of pointing out to people on Monday that we've got this, quite clear trend up in the outperformance of Ethereum over Bitcoin. And then it's actually really blasted off. And so I said on Monday, when the relationship was down here, I said, if you want to be a buyer of the cryptocurrencies on this pullback, the one you want to be looking at is Ethereum, because it's really starting to outperform Bitcoin at the moment. So when cryptos sell off, the baby gets thrown out with the bathwater, of course. So the really good cryptos with probably really strong long-term value propositions, I mean, they all get sold down too, because it's a bit of a short-term panic. So I think this relationship and looking at the Ethereum versus Bitcoin and saying, right, well, that's actually where the opportunity is. And basically from that moment, Ethereum has taken off like a rocket.
Yeah, right. How do you, Murray, maybe you should launch a crypto service.
well, I mean, it's all...
I know, I'm just pulling your leg.
Yeah. But I mean, look, it's all the same thing, isn't it? It's prices moving around, and I've just been wary of them because it's just so incredibly volatile, and it's you take your life into your own hands when they're moving 50% in the blink of an eye. But I'm still in the small cap, mid cap space, and that's still a very high risk spot, and that's why a major part of what I do is risk management. It's understanding how volatile these companies are and making sure that you can survive.
And of course, crypto also, because a big part of your method is studying the fundamentals as well, right? And looking absolutely at the wider economic landscape.
Yeah.
Do you find the price action in cryptos as compared to stocks is slightly different? Because cryptos is a true free market right now, isn't it? Whereas I know that you talked about it before, with your experiences back in the day with all the insane stimulus. Well, the stimulus is even more insane now. Like, it's just ridiculous. But do you find that thwarts your ability, or not just your ability, but a trader or an investor's ability to really read the fundamentals in the stock market? Because if things look really shaky, the Fed's just going to come in and distort everything.
Yeah, of course. Yeah. I mean, look, at the moment, you've got the S&P 500 going vertical. on the back of the stimulus. And, you know, you had the hot inflation figures came out, and the US bonds didn't sell off because the Fed's out there saying it's all just, you know, short-term inflation. It'll all fall back. So everything's rallying. There's nothing to stop this thing. There's really no resistance levels left, apart from where it is right now on a small thing, but I won't explain that to viewers. It'll take too long. But if we bust up through here, it can just go vertical. And I think it is a monetary phenomenon, really. And, you know, it's a bit of a hold on to your hats, and you've just forced to buy it, and just hope you can scramble out in case, you know, something does go pear-shaped. But yeah, the momentum's just pretty insane at the moment. It's incredible.
But I guess that's why you really do need a risk management strategy. I mean, I know you say all the time you're a trader, but really you're a risk management specialist. That's how you like to describe yourself, right? Do you want to show us one of the stocks you've been looking at? Because I know because the upside is just when things are like this, you need to have a strategy in place to know when to sell and when to sort of take part profits to just minimize that exposure. I know you don't like being 100% exposed to the market at any time. You want to minimize that time as much as possible, don't you?
Yeah, well, look, I think in the end, it's just accepting that we don't know the future. I mean, just because you're a trader and you've watched the markets for 30 years, doesn't mean that you've got a crystal ball and you know what's going to happen next. I think watching the market for 30 years and making a million mistakes just makes you a bit more level-headed. And, you know, when you've got things going your way, you take action then to lower your risk and to put yourself on the front foot. So for me, it's all about always being mentally on the front foot, no matter how well things are going. Even if everything's just 100% up and all my positions are great, I'm not thinking about, gee, I might make a bit more. I'm thinking, right, what can I do to put myself into a position where I no longer care what's coming next, you know, so that I've taken so much money out that everything that comes after it is cream. And even if it turns back down and gets hammered, I'll still walk away with a profit. You know, there's quite a few stocks. I'll sort of take 2 lots of profit. And I guess before I show you the example, my first profit target is all about my mental headspace of lowering my risk as quickly as possible. So I sort of look for a mean reversion move in a stock that I like fundamentally and think it's really great, but then I'll sell a third, and that lowers my average price to a point which is usually below a major support level. And from that point on, I either get out at break even or I make money.
Yeah.
So it's a no lose situation for me. I walk away with my original capital or I make money, and I want to get to that point as quickly as I can. And from that point on, I then let it go. If it then keeps trending, there's another point where I'll take the third profit, and that will often be around a point where I'm nearly free carried. So there's some where I'll be free carried and I'll make a 20, 30% return, let's say. So that means from that point on, the company can go bankrupt and I'll walk away with a 30% return.
Yeah, and that will definitely help you sleep better at night, right?
I mean, it makes trading more enjoyable. So I'll show you a trade we've got on, and it's sort of a good example of the risk management process of what I do. So you can see that there. So this is Alcidion Group, and they're involved in the digitization of healthcare. So doing hospitals and being able to get information flow between all the nurses and doctors and taking information down and having it spread around to everyone. Because, I mean, hospitals for years have been on, paper and it's been totally inefficient. And that's a massive growth area and a huge, spot where I'm looking at going, gee, I'm looking for good opportunities in that. And these guys have been doing really well from a small base. And when I'm looking at a stock like this, and we had this huge rally, this is a monthly chart, and you can see this big run to the upside. And what I like waiting for is these big impulsive rallies, but I like waiting for the shakeout, because so often you get the shakeout of new traders. The revenues don't flow as fast, something goes wrong. It's always the way that, you'll have moments when all of a sudden all the traders are trapped in a position and there's no strong buying, and all of a sudden it'll be a races on to try to get out. So I'm sort of looking at things like this, and I'll be looking at the whole wave, and I'm looking for, spots, and people will know about these buy and sell zones I talk about. It's just a 75 to 87% retracement of the whole wave. Once I'm finding support there, I'm sort of waiting for signs that the market's turning back up, and then I'm jumping on. So you can see that diamond there giving me an indicator that there's a monthly buy pivot happening there. And so this actually happened on news, had some good fundamental news came out, and I was like, right, this is the time to get on. So we bought here at 17.5 cents. And this is, 1, 2, 3, 4, 5. This is 6 months ago. So we've bought it at 17.5 cents, and I've got my stop loss, below where all the trading's been happening. So we don't have to risk too much, but the market has to do a lot to break down below that level. And then I've got my initial target was pretty much up into the sell zone, because what I'm trying to do is I'm just trying to find spots where things can go wrong. Because I want to say, right, if I'm wrong, and if this does go bad, where could the market turn down from? So if we've bought it here at 17 cents, I know that the resistance area should be up in that sell zone of this whole wave here.
Yep.
So prices, and you can see how the resistance came in there on that month. It didn't quite get there and sold off. So for me, I'm saying, right, if I buy it here at 17 cents, if it gets to 23 cents, where it could actually turn back down from, that's where I want to take my third profit. So we were only in the stock for, 1, 2, a bit less than 3 months.
Yep.
Before it hit my initial target. So from that point on, we either break even or make money. And then the price, has taken off. It's really blasted off. And I actually haven't taken my second lot of profit yet. So we're in at 17 cents, and 6 months later, it's up at 43 cents now, and actually up quite strongly today. So, it's really, we're way in the money. I could take this next second chunk of profit, and basically we'd be completely free carried in the stock.
Can I ask why you don't do that, Muzz? Or is there a target you're waiting for?
I'm letting the price on that second profit target. I'm letting the price action tell me what to do.
Gotcha.
So if you watch what's happening here, we've got the monthly buy pivot, which is there. And then I have these things called key bars that I keep an eye on. So once prices close above the high of that buy pivot on a monthly basis, that's a key bar. And then once it closes above the high of that bar, a new key bar. So it's like looking at the trend marching higher. And I can make calculations off each key bar for where buy and support levels are. So you can see that this is actually just marching higher now. It's in a really strong uptrend. So, who knows how far it could go? What if they sign another couple of great deals? I mean, it could be at $1. So while I've got the price action on my side, while the momentum's really going, I've already taken my part profit. So I know that I'm walking away with a break-even trade. And now if I get some sort of reversal up here, then I'll take my second lot of profit. And then we're left in a situation where we're completely free carried. We can't lose, even if it goes bankrupt. And I've still got quite a big position on, because remember, we bought it at 17 cents. So the final third of the position is up, 34, up 100 and nearly 50%. So the size of that position is actually growing quite massively. So it's just a matter of putting yourself on the front foot always, and then listening to the market and reacting when you need to. But what you want to do is cut your profits, cut your losses as much as you can, and really let your profits run. And that's what's quite hard, is letting your profits run, because it's so stressful watching the market fly all over the place. But it's less stressful when you know you've taken a big chunk of profit out, and what you've got left there, you're like, well, I'm actually happy to really see if this thing can go.
How did you come up with this, Murray? Like, was it just hard-born experience, or is it?
Yeah, it's really years and years of trial and error, of observing markets. I mean, from when I was on the futures floor, I was watching, how these ranges developed, and really watching how traders got sucked into bad positions and then shaken out. So it was this constant, whether you're looking at a 5-minute chart or a monthly chart, it's the same thing. It's just different investors, different traders. And it's the same thing that happens, which is, big breakouts look fabulous. Everyone gets sucked in. Then they all get shaken out. Big sell-off.
And it goes too far.
Short, too far. Then all those people get shaken out. And what happens is you often have this sort of oscillation around a mean. And so for me, I'm looking for those opportunities to buy or sell on the edge of the range and capture a move back to the mean, because that's a high probability event, isn't it? So if I can know that alone is a high probability event, then once it gets back to the mean, and if I de-risk at the point when the odds go back to 50%. So you'd imagine it like this, that at every moment in time, you're saying, okay, what are the odds of this thing happening? And you go, okay, the odds are 60, 70% that this will go back to the mean. But then once it gets back to the mean, the odds are now dropped to 50%, haven't they? Because once it's back at the mean, I don't know whether it's really going to break out or turn back down from that midpoint. So for me, once the odds go back to 50%, that's when I say, right, well, I don't actually know what's going to happen from this point. So I want to de-risk and turn this into a no downside trade so that I can then really sit back and see what happens. It's like planting a little seed and then saying, right, now what's going to happen now? I don't know. I just want to get myself into those positions as quickly as possible to be able to just see what happens and not care.
Can you use this same analysis to like gauge the general mood or direction of the market as a whole? Or because you zoom in on specific stocks to do this, but does it help you gain a gauge of where sort of the market momentum is generally?
Absolutely. But I'm using trends as well. I mean, I don't trade off like moving averages and that sort of thing, but I do look at the trends. And what I do is I create like a Bollinger Band around my major trends. And then I look at so it's like a signal, that's like a signal line. And then you've got the market oscillating around that signal line. And the Bollinger Bands is sort of like a calculation of volatility. And I'll look at the edges of that as the sort of understanding the trend and when it changes. So I do look at different things to help me. But all of the theory and looking at those key bars on the monthly charts, and I look at quarterly and semi-annual charts as well, which are really important. That's what tells you the really big picture momentum, and it works on the indexes as well. But boy, I don't trade them much anymore because it's really tough stuff trading the indices.
Well, let's give those watching a little heads up for what you're kind of seeing at the moment in the market. Like, so where are we at now? Is it a bullish sentiment, or are you cautioning people generally?
I think it's, for me, where I talk about false breaks happening all the time, that people get sucked in on breakouts and then get shaken out. And I can show you quickly if we've got time.
Yeah, go for it.
Just very quickly. I will bring up the ASX 200. There we go. And let's have a look at a weekly chart. And I just want to give people the sense of what I'm talking about these false breaks. Is you've got this rally. This is the rally over the last 10 years in our market.
Oh yeah, just share your screen quickly, Muzz.
Or can't you see it?
No, not yet.
There we go. There you go. That's a bit of me stuffing up.
No, that's all right. That's good. Okay. So this is the ASX 200.
Yep, ASX 200. And this is over the last 10 years. And all I want you to notice is what happens every time the market creates a new high. So we've got the market rallying, has a big sell-off. Now, here we go. We're breaking out to a new high there, right? What happens? Bam. Now we've got the highs there now. So there's the price breaking out to a new high. What happens? Bam. Now we've got a new high here. Prices are breaking out to a new high. What happens? Smash. And we've got here, let's have a look at when it created a new high here. Here it is breaking out to a new high. What happened? Bam. Here we go, a new high there. Months of buying looks like a really good breakout, doesn't it? smash.
Then the COVID crash, yeah.
Yeah. So you're seeing that over the last 10 years, if you were just a blind buyer of breakouts, you were wrong pretty much every time, unless you got out quickly. And this is how markets move. You have these, what you want to be doing, and what I look to do is wait for these sell-offs and then have a calculation for when momentum is shifted back to the upside. So you have the sell-off. I want to be buying it, here when the trend's shifting back to the upside. I don't want to be buying the breakout here. That's high risk. So where the market is right now, that's just, for me, I'm just a little bit nervous because we've been rallying for a year.
And it doesn't look like, I mean, I could be wrong, but from what I'm seeing, it's not hit the all-time high, or it's close to it, hasn't it?
Exactly. It's close, but not quite there. So what could happen if we're looking at, how these prices move, and if I'm looking at the 07 high here, and you'll see a slight false break, how it breaks up for a little bit and then smash. So we could be looking at something similar here, where it breaks to the upside, really gets people long and thinking it's going to go up forever, and then we have a correction. Now, that doesn't mean it's not going to keep going up, because if we look at a long-term picture, and I do a linear regression, and people may not understand what that is, but we're having a chat, why not look at it? But if I'm looking at the line of best fit of price action over the past decade, you can see that it's like a channel, isn't it? Where you've got, you watch out up here, good buying down here. Watch out up here, good buying down here. Watch out. And here, real overextension, but here we are heading back up into the top of the channel again.
Yeah, I see. Yeah.
So you're looking at something sort of like this. Doesn't mean it's not going to keep heading higher.
But the point is this analysis enables you to just gauge the probabilities of what potentially.
Do I want to be, we were buying all through this rally, and we've got great positions on. So my approach is, you're buying here and you're taking profits here. You're still long because the momentum is up. So it's still trending higher. So I still want to be long. I have to be long. But I've taken profits, and I'm in a position where if it does this, I'll be able to scramble out, and I've taken lots of profits and I won't care. Yeah. Because the risk is increasing that we're nearing a point where we could have some sort of shakeout. So rather than saying, oh, gee, let's go and really load up and buy 20 stocks here as it breaks out, I'm still buying things that I really like, but I haven't been trading the last few months. I've been, and really the small mid-cap space has seen a lot of profit taking. And the last couple of trades I've done have sort of been, treading water around where we've entered, and we've had a loss. I had my first loss of the year. And little things like that are just a sign to me that the market's changing. It's cyclical. There's moments when it's like shooting fish in a barrel, and there's moments when it's really hard. And when you have traded for a long time, you know that once you start getting signs that things aren't working the way they have been, that it's time to just be careful for a bit, because everyone makes money in the good times, but then amateur traders blow it all up in the tough times. So then they're sort of up and then they're back to zero. So you want to be able to make the money in the good times and batten down the hatches during the tough times and not lose too much and survive. And then when the good times return again, you're there and your account's fine and your headspace is good, because this is the thing, is to keep your headspace in a really positive, strong frame of mind. So you're looking for opportunities rather than scrambling out of trades you never really wanted to be in the first place.
Fascinating stuff. Thanks, Murray. Well, it's just really interesting to get that trading perspective on the market right now. And it's actually why we're showcasing your thing right now. And if people want to sign up to it, we've actually likened it to a quantum trading approach, which I'm not going to explain now, because people can sign up and learn all about it and join yourself and myself for a big event next week. So it should be really good.
Great. And I'd say to people, go and check out the Monday morning, videos I've done the last few weeks on Bitcoin, and because they should be in their inbox. Just check them out the last couple of weeks to see, what I was saying and what happened in Bitcoin and how they moved.
Great. Fascinating stuff, Murray. Thank you for your time, mate. And I won't keep you too much longer.
All right. Cheers. I'll chat soon.
Yeah. Till next time. Cheers.